This is Catch a Break, the insider's guide to breaking into and navigating Hollywood, conceived by Catchlight Films. Whether you are looking to work in film or television or new media, it's all production and it's all entertainment. Maybe you are already in the business, but looking to make a change, shift your focus, explore a new area. This is for you too. In each episode, Catch a Break brings you a panel of top experts currently working in the business for conversations you won't hear anywhere else. And we'll provide you with bonus materials you can get your hands on and sink your teeth into. We'll give you samples of paperwork and forms you need to be familiar with, video tutorials, exclusive resources that will all help with your success. The presenting sponsor of this episode is the entertainment payroll company Extreme Reach. They have the most comprehensive suite of tools and services to support all areas of media and content creation, from tax incentive support to accounting software and payroll services. If you are producing content, call Extreme Reach. This episode is also sponsored by VetYourCrew.com, a global database of entertainment professionals geared toward collaboration and inclusion. Think of it as a global address book for crew, which also has an interactive calendar to show when you're available, and a robust search engine to help you find and hire exactly who you're looking for. Go to VetYourCrew.com to sign up. You can find us at catchabreakpodcast.com and all the podcast providers. I am your host, Julie Harris Walker. You may know me from the podcast The Other 50%, a herstory of Hollywood, or even the Kiss My Age show. But today, the focus is on you and how we can help you to catch a break. Welcome to the Catch a Break podcast. This is the bonus episode where we drill down even further on our freelance and finance episode, and we talk about the difference between W-2s, 1099s, loan outs, individuals. We're going to get into all of that nitty gritty. So I would like to introduce Becky Harshberger. Becky is the Vice President of Payroll Tax and Entertainment Partners. She has sat on the IRPAC, which is the IRS Advisory Committee for Payroll and Employee Benefits under Obama. She's on the National Speakers Bureau for the American Payroll Association. And prior to all of this, she worked at Deloitte as a senior tax manager and in private industry in HR and recruiting. So when I tell you she is the top dog in this field, I am not kidding. And that being said, we also want to say this is not tax or legal advice. We are just going to be talking about the environment we are all working under. Welcome, Becky.
Thank you, Julie. It's good to be here.
Now, I ask everybody, what was your first job in this industry and how did you get it?
Actually, my first job in the entertainment industry was the job that I have right now with Entertainment Partners. And I got this job because they were my client when I was at Deloitte. And when the director of payroll tax retired, they called me up and said, hey, why don't you jump to private industry and join us? And I'm really glad I did.
And you've been there how long now?
I've been there 15 years in November.
Well done. So going back to our networking episode, if you haven't listened to that yet, that is how you do it. You get jobs in this business by who you know.
It's true.
A lot of the time. Mm-hmm. Okay, now we have you here today because we are talking about freelancers and all the financial aspects surrounding freelancers, and we know that you're going to be able to give us a lot of clarification around things like 1099s and W-2s, and should I be a loan out, or am I an independent contractor, or am I an employee? So we want to cover all those things. So our last guest, Ari Gold, talked a lot about managing your finances and it depends on whether you're a 1099 employee or a W-2 employee. Can you explain what those two things mean?
Well, one of the things you just said was 1099 employee.
That was wrong.
And that's wrong. Because when you're 1099, you're truly saying I'm an independent contractor, and the work that I'm performing is completely independent of the company that I'm performing the work for. So in the freelance area, there's a lot of times when someone's going to want to pay you on a 1099 instead of on a W-2. And they will say that it will save you taxes and it will save them taxes. And at the end of the day, depending on your financial circumstances, that may or may not be true. But there's a few things that you really need to think about before you accept a position to be paid as an independent contractor versus a W-2'd employee.
And so just to clarify what that means, as a 1099 person, if they've quoted you $300 for the day, you're going to get a check for $300. But if you're on a W-2, you're going to get taxes deducted from that check, and it's going to be less than $300.
Absolutely. And they are going to match some of those taxes. So the Social Security and Medicare that comes out of your check will be matched by an equal amount that they then deposit to the IRS in your name.
The employer.
Yeah, the employer will deposit it in your name. If you're paid on a 1099, you'll be responsible for both halves of Social Security and Medicare instead of just one half of it.
So if you don't have a lot of business-related expenses to deduct, it could end up costing you more taxes at the end of the day. Possibly.
Possibly. You just need to make sure you have an awareness when you quote a fee of $300 a day, let's say, you should be thinking in your head, okay, I'm going to have to take care of all of my expenses, and that may be equipment that you're bringing to the set, and I'm going to have to maintain that equipment. Maybe it's a laptop, maybe it's something more. In addition to that, after I take a few write-offs, I'm going to have to pay 15.2% in Social Security taxes, and I'm going to have to pay state income taxes and federal income taxes out of that same $300. So you can see your bottom line's kind of shrinking as we talk.
In fact, Ari suggested if you're paid in that manner, you should immediately set aside 20% into an account that you save for taxes. Does that seem like about the right amount?
I would say yes in 2018. It may seem low to those people that have been working out in the field, and it's less in 2018 because of tax reform. Mm-hmm. So everybody got a bit of a break, and so 20% should just about cover it. But the other thing you're going to notice is that you will not have SDI, state disability, in California or New York come out of your check. And that's because as an independent contractor, you don't have any disability coverage, and they are not going to pay into the state unemployment trust fund on your behalf as well. So when you accept a position as an independent contractor and that position ends, you will not have access to unemployment.
But if you're paid as an employee, you can file unemployment then?
Absolutely. You'll have access not only to unemployment, but if you're injured water skiing on the weekend and can't work for a few weeks because you broke your arm and your leg, you would have access to state disability funds for at least 13 weeks to help you through those times when you're not working.
Which also brings up another question. If you are water skiing on set as part of your job and you hurt yourself, under one circumstance you would have workers' comp and on the other you may not.
An excellent point, Julie. You're absolutely right. So as an independent contractor, you are responsible completely for any medical coverage, workers' comp coverage, any injuries that you have. If they occur on the set, you could be covered potentially under the general liability coverage, but you'd want to make sure of that ahead of time.
Yeah.
So you'd want to ask that question, while I'm on the set, while I'm working for you as an independent contractor, am I covered for workers' compensation under your general liability coverage? That's a good question to ask.
Now, there's some criteria that you should think about when accepting an independent contractor job. Like, doesn't the government require certain things for people to be classified that way?
They do. What the government's looking for is, do you have any skin in the game? Are you investing in equipment? And will you, if you don't complete the project, will you take a loss? And if you do complete the project, will you create a profit? So are you investing, number one? Are you doing something that is not in line with what the company's mission statement is? So is it truly something independent of the normal work that the company does? Those are the first two factors. The other factor that they look at is behavioral control. Are they telling you when and where to show up and how to work? If they are, then these fact patterns would indicate that you're more of an employee rather than an independent. Remember that word, independent contractor. So if someone's, for want of a better word, bossing you around all the time and wanting to have you do certain things just so, you're not exhibiting too much independence.
Right. So oftentimes, if there's an independent film and people are barely getting paid, or there's certainly not a payroll company involved, they may ask people to work as independent contractors, and we know a lot of people starting out are in that situation. How risky is that to do that as an independent contractor?
So I would say that is the nature of the beginning of the business. And we see this a lot as companies get bigger and bigger, and they'll come to entertainment partners and they'll want to come onto our payroll. And as many people in the industry know, we don't pay independent contractors. So you're either a loan out or you're an employee at Entertainment Partners. And so we often have to educate those that are coming up in the business to say, hey, it's time now, you're getting bigger, you have to stop the practice that's so risky.
You're playing with the big kids now.
Yeah, exactly. So that's for the owners of the company that are making a transition. But for the individuals that are working for the company, you would always want to be aware of the risk and the reward for taking on a particular position. Is it going to further your career? Is it going to give you networking connections? Are there risks involved in that you're shooting at night in a sketchy part of town? Do the people that you're working with appear to have a level of professionalism that puts you in an environment where, number one, you feel like truly you will get paid, and number two, truly you will learn something while taking the financial risk of having the responsibility for all of the taxes and not getting the benefit of disability or workers' compensation or unemployment. So you want to make sure that what you're doing is going to further you in some way, and go into it with your eyes wide open.
Now, you mentioned loan out versus employee. What do you mean by loan out?
So a loan out is a vehicle by which someone who is starting to really make what I would say good money in the industry would use to moderate and regulate what they pull into income. So the difference between an employee and a loan out is that you have made the financial commitment to create a legal company to represent you. And when you sign contracts, you could say, my company name is XYZ for the services of, and you, the owner of the company. So it is a one-to-one relationship with a legal company, an incorporated company, either an S or a C Corp, as we say in the tax business. You can also be an LLC, which is a disregarded entity, and we'll set that one aside for just a minute. So you would either be a C Corp or an S Corp. You would use this company as a vehicle to sign your agreements with a major studio. Most larger production companies and all of the studios, although they may not publish it, have a list of acceptable positions that they will sign a loan out.
And are those typically department heads?
They are things like a UPM, a casting director, a costume designer, a director of photography, a visual effects department head. That's at the level.
An actor, maybe, a producer.
A producer, a writer. Mm-hmm. That's at the level that someone would go ahead and incorporate and create a loan out.
And why might you do that as a person?
You might do that for a couple of reasons. One, this is a legal protection separating your assets that you've accumulated over time, perhaps a nice house or a nice car.
The big money you've made
in movies, exactly, from the work that you're currently doing. So you're keeping your business assets separate from your personal assets. So that's the first thing. And then you can go to the higher echelons of, an A-list actor that makes $10 million in a production. They don't want to pull $10 million into income in the year that they earned it.
And they're paying a bunch of other people.
And they're paying a bunch of other people, but they may want to leave that money in the corporation and only use $2 million this year because they may not get another show for 2 years. Mm-hmm. And so they want to have those funds available, but they don't want to pull it into taxation immediately. And they're also, just as you said, they're also paying out to an agent, they're paying out to a manager, their CPA, their publicist,
the list goes
to
on
their
and
assistant,
on. Their nanny.
And
they have a staff.
They've become a corporation themselves.
So if you're like the third level prop master, mm-hmm. does it make any sense for you to be a loan out company?
Financially, this is what I have come to know in my experience, and CPAs may differ, but the rule of thumb is you need to be making around $200,000 a year before it makes sense to become a loan out.
Oh, that's good information. Okay, now we set aside the LLCs. Why?
We set aside the LLCs because they're a disregarded company for tax purposes. An LLC is a limited liability company, And it is strictly a legal company. It is not a taxable company. So the IRS does not recognize it as a taxable entity separate from you. So you do not file a tax return for an LLC. You record all of the earnings of the LLC on your personal tax return. And as a just starting out, a lot of independent smaller productions will pay an LLC. At Entertainment Partners, we will not. We will only pay an S Corp or a C Corp, or we'll pay an LLC if it's made an election to be taxed as a S Corp or a C Corp.
Which is a whole different form.
A whole different form and a more expensive form of a loan out. So when you're just starting out, not being paid by a major player like Entertainment Partners, the formation of an LLC may have certain attributes that your CPA thinks that you can take advantage of. That may or may not be the case with the new tax reform, and everything is so new that a lot of people are still digesting it. But it can be very frustrating for that person who starts out, let's say an actor who has an LLC, gets on a pilot, signs a contract, and then finds out no one will pay the LLC and ends up being paid as an employee on a W-2 instead.
Yeah,
because it'll be very frustrating. So you want to be very aware of those times when an LLC is advantageous and those times when an S or a C Corp are advantageous. If you're making that kind of money, you really should have a CPA that's familiar with the industry guiding you on this.
Yeah, get professional advice at that point.
Yeah, exactly.
Okay, so if you're non-union and you're not working for a corporation and you need to get health care, how might you do that?
Well, California, as most states, not every state, but definitely California, has what's known as the healthcare exchange. And you can go onto the government website, and there are many options, many levels of healthcare coverage, depending on your personal situation. So I would send you to the government exchange for healthcare.
So you can buy it yourself if the production company you're working for is not offering it.
Right.
Are production companies required to offer it now?
They are not.
Even if they have more than 50 employees?
Well, if they have more than 50 employees, they are.
Okay, but small production companies
if you're talking about a small production company that's only going to be in business for this particular production,
they're never going to
get caught. Yeah. Then they're probably not going to have 50 people there.
Or 180 days or however many days it is.
One of the items that you'll want to think about as a freelancer in the industry is, as you go on and off jobs, going on and off somebody else's healthcare can be cumbersome. So having your own healthcare coverage could be beneficial, and it could be something that you could negotiate up front. Say, look, I carry my own healthcare, this is what it's costing me, can you pay 50% of it? So somebody may offer you $300 a day, you say you have your own healthcare, and you'd appreciate, you're going to be working there 6 weeks, can they pay 50% of your healthcare? They can always say no. Or they can say, you know what, we'll give you $50 or whatever it is, but at least you've put it out there and ask the question.
I love that. You might as well ask.
Yeah.
That's great.
Yeah, they may say no. But
anything else you feel like we should know in this topic of loan out, employees, independent contractors, payroll tax?
So I think the critical thing where I see people frustrated later on is you may work for someone that may not give you a 1099.
Oh.
And they may pay you in cash. And so
what do you do?
What do you do? Right. What do you do? So again, it's that risk and reward, but you're going to want to keep records. So if someone does write you a check, make a copy of it. Take a picture of it. Not make a copy of it shows my age.
Make a Xerox
Make a
of
Xerox
that check
copy
and file it in your paper files.
Right, exactly. So take a picture of it. Put it on, enter it onto a spreadsheet of some who, when, where, how, who you worked with. And I would say truly, just as we started the conversation, how did I get a job in the entertainment industry? Think about it this way. You should be keeping an Excel spreadsheet of everybody on the set, everybody you worked with. You want to continue working in the industry? Get their email addresses, send them a note, hey, great working with you, hope to work with you again. Here's a little bit about me. If you ever hear of someone that could use my services, happy to network with you as well. Start that early in your career and keep all of those connections either on LinkedIn, on a spreadsheet, and work your network.
Fantastic advice. Thank you so much, Becky Harshberger.
Thank you, Julie. People can reach me at Entertainment Partners. My email address is B, as in Becky, Harshberger, HARSHBERGER @EP.com. And my office number is area 818-955-6016.
Wow, that was mighty generous of you to give out that direct contact. All right, thank you so much.
You're welcome.
This has been Catch a Break, the insider's guide to breaking into and navigating Hollywood. I'm Julie Harris Walker.
I would like to thank our guest, Becky Harshberger.
And special thanks to our intern, Akiva Nemetsky, and our consultant, Lee Schneider of Red Cup Studios. Thanks also to Audio Department, who generously provided the recording equipment, and Jean Milanofi, who designed our logo. And a big thank you to Andrew Jocelyn, who created our theme song, Mantra for a Struggling Artist, and any additional music you hear throughout. Catch a Break is produced by Jeanette Volturno, Jessica Milanofi, Marcy Brown, Rick Osako, Shirley Davis, and me, Julie Harris Walker. Now be sure to check out our next episode. It's called Call My People. We're going to break everything down about representation. What's a manager? What's an agent? When do I need one? How do I get one? We're going to talk to an agent. We're going to talk to a manager. We're going to tell you everything you need to know. So go get that episode, Call My People. You can find us at catchabreakpodcast.com, and that is also where you can go to download the bonus materials. Join our mailing list so you don't miss an episode or other programs, and we want to hear from you. So reach out through the website. Again, that's catchabreakpodcast.com, and also follow us on Facebook and on Twitter. Thanks for listening, and we hope this helps you to catch a break.